Hey there, good morning, good afternoon, good evening, whatever applies to you. Welcome, welcome, welcome. Welcome to Open Book Realtor, the channel where we give you some insight and some tips to help you buy and sell more successfully, but most importantly, give you the reality of real estate. Today, we're going to be going over how to choose a loan officer or a lender when you're making your residential real estate purchase. There are a lot of pieces to that process, so it's really important to arm yourself with questions you need to make sure you're asking them, but also some red flags you want to be on the lookout for. But before we get into all that, please remember that I am a licensed realtor in the state of Ohio, so some of this may differ in your state or country. Not all of this should be taken as explicit instruction, but more for some fun, but some general information and insight. Make sure you contact your local real estate professional or your attorney for contract or process questions. If you're looking to buy or sell real estate in the Dayton, Ohio areas, I would love to work with you. If not, don't worry though, I'm actually a relocation specialist with the leading real estate companies of the world, specializing in the best connections for buyers and sellers in the entire world. I'm local and global, so make sure you leave me a like and subscribe, but make sure you comment as to what your needs are, where you're at, all of that I can help you with. I'm happy to make top-notch connections to any agents or professionals in your area. All my links and contact information are going to be in the description, so with all that out of the way, let's get started. Now, a general rule of thumb when you're purchasing a home is to shop around for your lender and loan officers. Not every lender is created equal. Not every lender offers the same loan types or has the same programs or anything like that. Your needs are specific to you, so you want to make sure that you can find someone you trust, because this is going to be one of the largest investments you make in your entire lifetime, so that person should be having your best interests at heart. So make sure that you get to know them, get to know how they work, and make sure it jives with you and your personality so you can really trust them. Now, in some future videos, I'm going to go through some really specific nitty-gritties of some of the topics we're going to talk about, but for today's video's purpose, I'm just going to talk about 3 general categories you want to keep in mind when you're interviewing your loan officer or lenders potentially to help you make your purchase. The first one is going to be their communication and reputation. The second, their loan types and costs associated with those. And the third is going to be their services and programs that they make available to you. Okay, let's talk about communication. The first question you want to get answered is, are they giving you a cell phone or an office phone number to get in touch with them? This may sound trivial, but it is incredibly important, because you are probably going to be searching for homes on evenings and weekends, just like every other buyer out there. But for some reason, some lenders only give you office phone numbers. So if you run into a situation where it's Friday evening and you've just seen a house that you love, but you're not quite sure it fits into your budget or if it is within your monthly payment numbers and all of that kind of stuff, you need to get those numbers crunched. And that loan officer, if they're not giving you a cell phone, they're going to be unavailable for you to even return a call with the proper information you're looking for until at least Monday or Tuesday of the following week. That is not okay, because most homes are selling quickly and you need to make sure that you have the ability to offer on something and land it when you want to, not at the convenience of your lender. Now, you also want to make sure you know how they communicate and what platforms they communicate on that match up with how you communicate. So for example, if you're going to be sending emails because you work and you can't get to your cell phone very easily while you're at work, and an email is convenient, they need to be able to respond via email effectively, give you clear information that answer your questions. Also, see if they're willing to meet in person. We are kind of in a different world now where we do a lot of remote working in general, but it's still important to have in-person visits, or that option to have an in-person visit. Some people really are emotionally motivated, and if that's how you already know you're going to resonate with someone, is by getting to know them, maybe go get some coffee or meet them in their office or something like that. In regards to how they communicate or communication in general, one of the red flags you want to look out for is whether or not they have a professional voicemail or not. It is incredibly unfortunate for me as a realtor to contact my buyers' lenders and their voicemail just says, "Hey, it's Joe, leave me a message." No. Their voicemail is actually very important, because title companies are going to start to be involved. There might be, some form of a program where there's a representative that has to get in touch with that loan officer, et cetera, et cetera, et cetera. These people need to know who they're dealing with, and calling a number that just says, "Hey, it's Joe," versus, "Hey, it's Joe with such and such mortgage company." That is going to be really helpful for that person to make sure that they contacted the correct individual. And also, if they don't put that in their voicemail at all, but they gave you a cell phone, then I would call into question how serious they are about being your loan officer, because if they don't want the general public that calls that number to know they're a loan officer and know that that's them, you know, they must not want to do that much business. That would be just my guess. Then the final piece of communication is making sure that they communicate well with your realtor. Your realtor needs to know all kinds of information from them to make sure that they are setting up the contract and your file for success. If there's something that your loan officer is going to be setting up for you, like a down payment assistance program or anything to that effect that might have special requirements of the home, and they haven't communicated that to your realtor, if you place an offer and go into contract on a home, then it's going to throw all kinds of wrenches into the process, and it doesn't just fix itself. Like these things, we have to get ducks in a row ahead of time. So it's very, very important that your realtor knows what they're looking out for based on the criteria of how the file is set up from your loan officer. So make sure that they touch base with each other and are in constant communication. One of the pieces I recommend you take into consideration about their reputation is, are they local or are they national? Or are they a really large company or are they small and independent? These can play out very differently in different areas. There are some regions that really like to support their local businesses. And if you're in one of those areas, it would be wise to probably choose a local loan officer that you can work with. But there's also a benefit to using a national lender or something like that, because they might have more products at their disposal to assist you with. Everything is circumstantial to your particular situation. Again, why it is so important for you to interview definitely more than 2 loan officers. One of the main differences between a local loan officer and a national loan officer, regardless of what lender they actually work for or the company or mortgage company that they work for, is to make sure that they understand your local process. Every single region has a different form of a contract that is used to purchase real estate in general. So you want to make sure that that person is very familiar with that, because there could be dates that are incredibly important to that contract, and if your loan officer does not adhere to that, technically that is your side of the contract breaching contract, and the seller can then terminate and sell to anybody else that they'd like to. There's another part of that too, which is the taxes for your county. Some counties do taxes in different prorated methods. So you want to make sure that you are paying attention to a loan officer who actually knows how the taxes are supposed to be formulated, to make sure that your escrow account is set up, 1, properly, but 2, that you're not blindsided by additional funds that you have to come to the table with that you weren't expecting, because they didn't really know how your local county or city did things. So you really want to make sure that if they are not local to your particular city or region, that they at least know how everything is to be conducted and that they really are moving that process forward. A lot of national lenders have a tendency to put a blanket amount of time that things are going to take. So for example, a certain loan type might take 4 to 6 weeks, and they'll say minimum we need at least 5 weeks. Well, it doesn't necessarily have to take 5 weeks if they can, move efficiently. But the national lenders happen to put those kind of, protocols in place that this is just how they do it. They don't alter from that. They don't vary from that whatsoever. Whereas a local person knows your particular market, and if it's very fast-paced and intense, they know to up their game, or they and their underwriting departments know what to do to be more efficient to make sure that everything is landed perfectly for you. You want to take these conversation pieces of being local or national into consideration also, because their pre-qualification letter that they have given you is going to be attached to your offer that you present a listing agent and the sellers. And if that particular lender does not have a good reputation on the local level, or with that particular seller or something like that, that could be a reason why you lose in a multiple offer scenario. Or if it's a reputable lender, whether they're national or local, but if they have a good reputation, they could be the reason why you win in a multiple offer scenario. So if it's a home that you really love, make sure that you've got a good team on your side that is helping making all of that magic happen. So really what it comes down to is that their reputation with other realtors and the general public is actually your reputation when you're placing offers. Okay, now we want to talk about the different loan types and the costs associated with those that each lender can provide you. There are many different loan types, but the most common are going to be conventional or FHA. There are different credit requirements, down payments, closing cost requirements, etc., associated with each type, but also there might be some lender-specific requirements to each of those aspects for those loans as well. Those are the most common loan types in general, but there are all kinds of loan types that can be circumstantial to your particular situation, your location, or benefits that you may or may not realize that you even have. For instance, like a USDA loan, a VA loan, or a 203K loan. Like I said, we're going to dive pretty deep into some details about those in other videos, but make sure that you are talking to loan officers that are providing you the options of those loan types that are best for your situation, not just what's best for them. There's an unfortunate situation going around right now where a lot of loan officers are convincing people to do conventional loans because it's easier to compete with, or that's just what sellers want to have rather than an FHA or a VA or something like that. And that's just frankly not the case. It's all about getting to the closing table, and at the end of the day, whatever your situation is what all of your team members need to be working toward. You really need to make sure you also get your numbers crunched with these loan officers. So give them as much information as they're asking for. Let them do everything they need to give you the proper information, but you need to know what your total down payment is going to be, along with your closing costs or settlement charges and whatnot, to make sure you have an all-encompassing idea and really firm grasp of what your total out-of-pockets are going to be, which is also called cash to close. You definitely want to make sure you know your monthly payment as well. Each of those loan types that I mentioned have a different rate, and different lenders have different rates as well. So that's going to depict what your monthly payment is going to be, also based on your purchase price and whatnot. But if you let your loan officer know what you want your monthly payment to be, they can kind of work backwards from there to assist you with the price point and or loan type that's going to be most suitable for you. One of the pieces of numbers that people tend to just overlook and not pay attention to is what their maximums are. Make sure you know what that is, because just because you want to afford $1,000 a month at a certain price point with a certain loan type, if you don't really know what your maximum is, you may not realize that just by upping your monthly payment by only $50 a month or something like that can get you into a different price point, which allows you to actually get the home you really want. So make sure you do understand what your maximum looks like versus what you prefer to do. Those are just good information for you to know in general. Then on the financial end of things, you want to make sure you understand how your mortgage payment is paid. Can you pay it online? Can you do a direct deposit type of thing? Or do you pay with a card? How does that work? You know, there are still lenders out there that require you to mail in a check or go in person to pay your mortgage. If that's not how you want to pay your mortgage, you need to know that ahead of time. So do that research, ask those questions. How is your monthly payment or your mortgage payment paid? How can you do so? But then also make sure you learn when that first payment is due. This is actually really important that a lot of buyers have no idea about. In general, now things will vary, but in general, if you close in a month, so let's say it's May, you close in May, you are probably not going to have a first payment until July 1st. So what that means is if you close at the end of May, your first payment is going to be skipping June and due on July 1st. But if you close at the beginning of May, you'll get all of May, all of June, and your first payment is not due until July 1st. So it is in your benefit, generally, at least in my area, for the buyer to close at the beginning of the month. So make sure that you're running that information by your lender too, to make sure it lines up with the situation you're in. Do you have a lease that's coming up or anything like that, so you don't have to double payment yourself if you can avoid it. Okay, now for a red flag when it comes to the costs and things like that. Something to look out for is if a lender is trying to force you to use a certain title company. That's just not cool. Nobody should be forcing you into the situation regardless. Now, I have heard of there being some lenders out there that will give you a particular benefit by using their title company that is preferred or something to that effect. And if that's the situation you want to rope yourself into, that's fine, but please just understand you need to be disclosed that information ahead of time. So ask them if there are any forced association that you have to have. Do you have to use a certain title company, or are you able to use any title company you want to? Because a lot of that information you don't find out until after the contract is accepted and turned into everyone, and then they say, oh no, we have to use this title company. No, we needed to know that ahead of time. Again, why their communication and reputation and information should be provided to you ahead of time. They need to disclose that, so ask them as much as you can. So now we talk about some of the services and programs that some lenders or loan officers will be able to enroll you into that might be more beneficial. There are some down payment assistance programs on a local, state level, or a federal level, and there are rules that come with those. So make sure that you have a loan officer who knows how they operate and how they work, to disclose some of that to you ahead of time, so you're really prepared that that's something you want to do. Some of them require that down payment assistance gets paid back at some point, either over the life of the loan or in one large chunk when you sell. There are all kinds of requirements. You might have to live there for at least 5+ years, and if you're cool with that, great. But if not, and you don't know if that's something you want to be locked into, that might not be the best situation for you to get into. So learn the rules, but make sure your loan officer teaches you those rules, because they're the ones who are going to be processing all of that, so they really should be familiar if they're going to be attempting to offer you any kind of program like that. And there are different programs that can also assist with your closing costs, whether that is, roping it into your loan in some way, or some form of a gift or grant like we mentioned in other programs. But pretty much every lender does things a little bit differently, and they all have programs that are going to try and be competitive with each other, but also that can be more suitable to you. Some lenders are just better at servicing their buyers and clients' needs better than others are. So examples of some of these programs that might be more beneficial for you with certain lenders versus others are maybe getting you completely, fully underwritten and approved as a buyer. That is pretty crucial. That allows you to be very competitive. That basically means that the only thing that has to happen at that point once you go into contract is getting through things like inspections and appraisal, which that can happen rather quickly sometimes if you're moving, with speed. And the lenders that are really capable of doing this can actually make you more competitive than a cash offer, because that means that the entire process is already done. We just need the reports from the appraiser in and a check mark from the underwriter for that, and we're clear to close. I've had some of these programs go from offer to clear to close in less than 2 weeks, which is much faster than most cash offers like to perform. There's also things like a bridge loan or a blanket loan. Those are called different things in different regions, but in general, the idea of those is to allow you to make a purchase first, so you don't have to sell another property in order to make that purchase. Some people are selling their home to make a new purchase because they have to use the equity in the home and take those proceeds to make that next purchase. But what that does is add a contingency onto the purchase, because if that previous sale falls through, then so does the next one, and so on and so forth. So it is really beneficial sometimes to have a lender that has capabilities and programs of things like what's called a bridge loan or a blanket loan or what have you, that allows you to make a purchase without having to sell so quickly. You can actually take a little bit of time, move in, then sell, which makes your life a little bit smoother and easier. It's very stressful juggling 2 transactions at one time. So if you can find a lender who does those are definitely key people to have in your pocket. Another example of programs like this are for when loan officers are really connected to their local agents well enough to know what each of them offer, what each of their brokerages offer, and things like that. So when they get a buyer that's come to them without an agent already, they can actually connect them to a really good agent for their particular situation. So for example, if somebody comes to them and they realize that they could benefit from a particular relocation program similar to what I can assist people with locally, but I can also assist anyone with it around the United States. So if you have questions, leave me that comment and I will certainly get into whatever I can for you. But there are programs out there like the Leading Real Estate Companies of the World program called Military on the Move. It's a free credit rebate program to thank our service members for their service. There is no cap to it. It can be used indefinitely whenever they purchase or sell, as long as they're in a state that allows it. So it's a relocation benefit without necessarily always having to be moving across the country. And loan officers that know about programs like that will connect them to an agent who can take the best care for them, because it's the best thing to do for that buyer. Really what all of those program examples and things like that that I just mentioned come down to is making sure that you have a loan officer who's just doing the right thing for you. And whatever programs and services that they're enrolling you into, don't try and steer you into something that's going to be best for them or the easiest situation for them, but it really is the best situation for you because they've provided you information. They've been forthcoming and disclosing all kinds of things for you to take into consideration and make the best choices for yourself. Because at the end of the day, it is your purchase, not theirs. Part of the services and programs that they can offer you comes down to how they plan to update everyone through the process. So your realtor has found you a home and your realtor is going to coordinate everything continuing to get to closing, but once you go into contract on a property, or open escrow if you will, the loan officer and lender kind of takes the helm of some things in the background. So it's really important to make sure that that loan officer and lender is capable of updating yourself, your realtor, and the title company about the entire steps of the process that are happening so far. That way your realtor can very easily give an update to the other side of the transaction to make sure that they know that we're moving along and that, you know, the good juju is staying the whole way. Lenders that kind of disappear and then just only let you know when there's a problem, that's not really the best way to go about something. Some of these programs are automated, but some of them are also manual. You know, some people like a personal touch, so that loan officer might be making phone calls themselves, text messages, emails, or whatnot, but some of them are automated. So maybe ask them for examples of what that could be. That way you know what the expectation is, and your realtor can also know what that expectation is to also try and sell the lender to the seller and the listing agent as well, not just your offer. Now we've talked about some of red flags already. In this particular section, a big red flag when it comes to services and programs that they offer is if they say or insinuate anything to the effect of, if you use us to buy your next home, we'll buy your current home. That is a form of control. And unfortunately, there are some people who do need to fall into that situation. And I really hate that that's a situation they think is going to be best for them. But it can happen. If that's the situation you want to go into, all I can say is good luck, because they can be quite a headache, because at that point, the lender that they choose to use, or that person who's purchasing their home to be their lender, now has all the control throughout everything. So you're literally going to be at their mercy the entire time. Alrighty, there you have it. Those are some really good tips on how to select a loan officer or a lender for your real estate purchase in general. If you have any particular questions though, feel free to leave me a comment, or if you need connected to a realtor who has some really good loan officers at their disposal, leave me that comment of where you are and what your situation is, or reach out to me directly with all my information in the description, and I'd be happy to help you however I can. Alright guys, well that's all I have for you today. Take care. See you next time.